So let's start with the rapid fire round. The first one is, at what age do you want to retire?
Oh,
You can also pass if you don't want to answer.
no, I mean, it's an interesting question that I actually haven't thought about. So, I mean, there's always the official age. Then there's the when do you want to retire, which could be later, which could be also earlier. Okay, anyway.
So it is a rapid fire.
Yeah. Okay. Anyway, so let me answer that in a very simple way. So, the question was that when do I want to retire? I want to retire at 65.
Okay. What's your favorite mobile app?
Favorite mobile app would be
Right, gotta be rapider than this.
yeah, because I mean I'm so boring with my phone. That's the thing.
It's fine. Most people said Google Maps.
Yeah. Okay. So, okay, I'm gonna say Wolt food delivery.
How long does it take you to get ready in the mornings?
Oh, 15 minutes.
Most embarrassing moment of your life?
In one word.
Word or sentence?
Okay. When I had to do skiing in my military service.
Okay. Mountains or beaches?
Beaches.
What's the most useful mobile feature you can't live without?
Location.
Favorite color?
Black.
What time of day are you most inspired?
Morning.
How many hours of sleep can you survive on?
Gotta be 8.
Fill in the blank. An upcoming technology trend is blank.
Artificial intelligence as a technology trend is overhyped.
The city in which the best kiss of your life happened?
Prague.
Ah, okay. Android or Apple?
Apple.
The biggest mistake of your career?
I don't hit on that shit. Yeah, no. Right. Have I done any mistakes in my career? The biggest mistake on past.
Okay. How do you relax?
Oh, I play my PlayStation.
What do you play on the PlayStation?
God of War. At the moment.
How many cups of coffee do you drink per day?
12.
A habit of yours that you hate?
Drinking too much coffee.
The most valuable skill you've learned in life?
Speaking English.
City or countryside?
City.
And the last one is your favorite Netflix show?
Does it have to be Netflix?
Any can be any platform.
Okay, at the moment it's going to be the Last of Us on HBO.
Okay. All right, so that was the end of the rapid fire round. Now we're going to go on to the bigger questions.
Okay.
So as a veteran in financial technology and payments, what are some key trends you're seeing in the industry currently?
Currently, it's a lot about the evolution of the regulation that defines financial services. So we're seeing companies that are not banks entering this space, and this is creating a new conversation around what we call embedded financial services. In this embedded financial services, basically any user experience, any application can have payments, even financing and other financial services as part of that user experience. So you don't jump to do your banking. It's the financial services just become a natural part of everything. And because of this new distribution mechanism of financial services, there's a lot of conversation around what is the role of a bank. How do you regulate, how do you control, and how do you create security around these embedded experiences for users so that everything becomes easy but at the same time safe. That is the number one trend that I'm looking at the moment. The second big trend that we're working on actively on is central bank digital currencies. So the central banks traditionally have only given physical cash out for regular citizens like you and me to use. And other than that, everything is dealt through the banks. With central bank digital currency conversation going on right now, the central banks want to understand, is it possible to create a digital equivalent of physical cash in an online world? The central banks want to protect the public option for any payment mechanism now that physical cash is diminishing in its usability. So in an online environment, there is a good question to be asked: what is the role of a central bank in these online environments where physical cash cannot be used? So that's the second big trend that, of course, we're quite keen on following at the moment. The third one is collaborative infrastructure. That sounds a little bit nerdy and boring, I know, but it's in practice it means things like digital identity, payment interoperability, the ability to basically send payments from one account to another account without ever thinking about where the other account, for example, is. In the world of mobile phones and mobile technology, this is already true. I mean, I can dial a number, I can send a WhatsApp message to a number without ever thinking if the other side is on my same network, for example, or not. We want to achieve this same goal in financial services as well, and I think this common infrastructure is making this happen. The interoperability is a key topic that we need to address in the financial sector in general.
And so what is a trend that is overhyped, but you don't think it's a trend?
Artificial intelligence in general has been overhyped throughout its existence, basically. So if you look at the history of artificial intelligence, in the artificial intelligence conversation started, I guess the first hype cycle was around the 80s when there's first computers came around. And the artificial intelligence, of course, failed to materialize beyond simple chatbots effectively. Now we're seeing another wave of hype around artificial intelligence. And I think while some of the applications are very impressive, including the well-known Chat GPT, which everybody keeps on talking about, I think there's, as always, the overhyping of its capabilities is quite clear already at this stage. At the same time, having gone through a lot of these hype cycles before, so there was a hype cycle around blockchain technologies, for example, cryptocurrencies, all of these things. None of them have actually delivered on their huge promises of upending the world, basically. And we've seen this go away. But as with blockchain, as with mobile applications and mobile payments, and as we're seeing right now with artificial intelligence and more specifically generative AI, there's going to be something after this hype that will actually move things forward. So I don't dismiss it entirely, of course, I don't. There are useful applications for generative AI in the near future for sure. But I think it's quite clear that this general artificial intelligence that will make a lot of creative work completely redundant, for example, is probably not going to be happening to the extent that people are saying it will.
Okay. So what role do you see technology playing in driving financial inclusion and expanding access to digital financial services for undeserved communities or underserved communities?
Yeah, that's a really good question. That is exactly what we are working on at Ericsson, Mobile Financial Services, which is the unit that I represent at Ericsson. The ability to, or the technology allows institutions that are maybe not banks or non-bank institutions to offer financial services to people that the banks either cannot or don't want to serve in a lot of countries. As we know, especially in the emerging economies like of Africa, for example, there's a large parts of population that only deal with cash, and they don't really have access to the formal banking system due to the heavy onboarding cost of these individuals. There's also the scarcity of basic banking service infrastructure in a lot of these places. But on the other hand, the mobile operators are everywhere in these countries. So there's an interesting statistic that there are more mobile phones than toothbrushes in the world, even today. And while that's not a comment on dental hygiene, it's actually a comment about that everybody has a mobile phone pretty much in this world. And that mobile phone can be used to access the financial system now, because the cost of getting these people to use their money through their mobile phones is much, much lower than it is to open a real physical bank account for each of these individuals. These mobile operators are driving this, especially in Africa. We've seen a phenomenal increase in financial inclusion happening in those countries where mobile operators have taken the role of offering financial services to these underbanked citizens.
Okay. How do you balance the need for innovation and rapid development in the financial technology space with the importance of security and privacy for consumers?
That's a really good question. So I've been working in the financial sector for more than 20 years, and more or less I've been always working in roles where I try to push the envelope a little bit forward, whether that is in a role in an innovation lab, in a bank, or as a business developer in technology companies. I've been always kind of looking at that next big thing and trying to move things forward. The unfortunate fact is that innovation is completely against the principles of regulated financial institutions. So people say that it's almost impossible to really innovate in banks, and they are resisting innovation. Some people say that it's a bug, but no, actually that is a feature. These institutions are built to resist change because they need to be very stable, and they need to change slow in order to maintain the foundations of trust that they have built in many cases over decades or even hundreds of years. So this slowness is, again, by design. So the processes, the supervision, the regulation is defining these processes to be very slow. But to answer the question, how do you mix innovation and rapid development in those pictures? Well, the development processes, the agile methodologies, the rapid development is already making its way into a lot of the financial sector companies, including technology companies and banks. So that change is happening. That will give more agility into the processes when they create new things. But as far as the innovation part goes, so basically bringing in new ideas, new ways of doing things into banks, the best way to do this actually is not to build on that legacy infrastructure. It is actually to create a separate entity and create the processes, the governance, and the technology basically from scratch on the side of the existing stack in these financial service companies, and then gradually, organically integrate those new ideas, those new platforms, new technologies into the mainstream banking, but without touching the old core too much. There are interesting examples of different banks. One of my favorite example is the Swedish bank SEB. They started an innovation lab called SEBX, where they built everything from scratch. And now the SEBX that they built is a new business line for SEB called SEB Embedded, referring to the embedded finance trend that we talked about a little earlier. So I think this kind of on-the-side development while respecting the security and regulation is an interesting way of bringing in new innovation into these banks.
And what are your thoughts with regards to this for banks like Revolut and all these tech-focused banks?
I think the fintechs like Revolut that started with an electronic money license, and now lately it has become a fully licensed bank, at least in some jurisdictions. These are companies that started their journey from scratch. So they started building from nothing. They brought in services and partners, of course, but again, they had the luxury of starting from zero and building digital first, no branch type of financial services experiences, and that gave them a lot of rapid development speed in the beginning. Now it's going to be interesting to see how these businesses like Revolut, like Klarna, many of these very well-known fintech companies are going to scale and be profitable in the future. They have created the culture of rapid development innovation because they had the luxury of a clean slate when they started. But again, ultimately, all of these companies will become legacy companies, and that is the time when they need to see how can they maintain this DNA of rapid development and innovation while being profitable, secure, and trustworthy for their customers. The abundance of venture capital in this fintech space has allowed a lot of these players to scale without giving too much thought about being profitable. And now that we're seeing the economic change or downturn happening, a lot of that capital might not be as easily available anymore. So we're going to see the coming years are going to be quite interesting to see who is going to thrive in these new circumstances. Yeah. So I guess who was it who said that when the tide goes down, you will notice who is swimming without swim trunks. So I think this is going to happen as well.
You don't feel, well, I suppose thematically there's also a chance that the bigger fish might not be able to swim and the smaller ones might just be able to get out.
Yeah, it remains to be seen. I think that this kind of upending of the existing banking infrastructure and the end of these incumbent banks has been prophesized for a very, very long time. When the fintech boom started for the first time around 2000, actually after the crash around 2008, I guess that was the official start of the fintech boom. A lot of these fintechs came to the market with the idea of, we're going to disrupt the banks. We're going to make sure that these banks in 5 years, you will no longer be using banks. You will be just using fintech companies to replace your existing banking experiences. This has not happened. And if you listen to the fintechs talking now, they talk a lot about cooperating, collaborating, and even partnering with banks instead of trying to fight against them. Now, does this mean that the banks will always be there? I don't know. I mean, I think it's anybody's guess. But if you look at the trends so far, the banks seem to be doing quite well in despite of everything. And I think the role of a bank will change to be more of a trusted provider, the anchor in the regulated environment. But then the distribution mechanisms might be happening through new ways, like fintechs and even mobile operators in some countries.
Okay. So as a member of the European Central Bank Digital Euro Market Advisory Group, can you share your insights on the potential impact of digital currencies on the financial industry and society at large? Yeah,
that's a great question. So central bank digital currencies, like I mentioned, was one of the main trends that we're following at the moment. And from the ECB or European Central Bank's perspective, the digital euro is a way to basically replace, or not actually replace, I would say augment the physical cash element of central bank money. The large parts of the European economies, especially in Northern Europe, have already moved into practically cashless economies. So if you go to Stockholm, Helsinki, Oslo, Copenhagen, you don't see ATMs anywhere. You don't see people using cash. Everybody's using some way of electronic or mobile payments everywhere you go. And while this is great, of course, cash in a sense is a very inefficient way of transacting with value. The downside of that is that all of these solutions are being provided by private actors, and these private actors are sometimes multinational corporations that don't really have a European heritage with them. So while this is actually great from a global economy standpoint, there's always the argument to be made that you need options. You need also sovereignty to a certain extent for critical infrastructure. So the central banks are seeing this, the central bank digital currencies, as a way to provide a public option for these private tools for payments. And I think that's actually a pretty good idea. The resilience factor that actually creates the balance that will be there because of this optionality is something that is a goal worth achieving for sure. The other element of central bank digital currencies, like the potentially upcoming digital euro, is the financial inclusion angle. One of the clear goals of many of the central banks is to make sure that everybody has access to digital cash or digital money through this central bank digital currency, which might not necessarily be true when you're only dealing with private options for electronic payments. I already mentioned that mobile operators, especially in places like Africa, have already done a lot of good work in financial inclusion. and making sure that people have access to the financial infrastructure. These models are also being recognized by central banks, and they want to ensure that everybody will have access to the financial system with this public option as well.
Do you see any downsides to this digitization of the currency?
Yeah, so the downside of a central bank digital currency is basically that it's practically impossible for an average citizen that doesn't know anything, too much about the financial system to differentiate what actually is a central bank money and what is commercial bank money, and does it even matter? The dual role of the central bank is to also ensure the stability of the financial system, so that they will never go against or compete with commercial bank money. The whole idea is to augment the existing system. That also means that a central bank euro or the commercial bank euro, they look exactly the same and will have the exact same value, and only the account itself will look a little bit different. So the downside really is that in practice, if you're using card payments on a day-to-day basis and you don't really pay much for these transactions anyway, there's not much to differentiate on the central bank side of things. So that is a challenge and a downside of this entire conversation. Are we just creating more complexity that might not be even necessary just because there's a policy question? There's a policy question here. I think that's an interesting dilemma that the central banks are actually trying to tackle as well, by being very clear about this communication. What is it and what it is, it's not. So maybe that's one thing. The second thing, of course, is that because we're dealing with a regulated financial system, there's never going to be this full anonymity of transactions in the central bank system. Because the central banks need to maintain the financial stability and need to fight financial crime, they need to fight money laundering and terrorist financing. For these reasons, while there always will be a high level of privacy in these transactions, which is great, the full anonymity will probably never be there to the extent that people have achieved with physical cash today. So while they are creating a digital equivalent of a physical cash payment, that fully anonymous nature will not be achieved. So this is a bit of a downside from a central bank's standpoint, because they cannot deliver on that promise within the constraints of the existing system.
What are some potential risks and benefits associated with the concept of anonymity in digital identity, and how do you think these can be addressed?
Yeah, that's a direct connection to the previous question, of course. And the full anonymity in the financial system, of course, is practically impossible to be done because it will be extremely dangerous to allow full anonymity of financial transactions in an online environment. And the reason is because in an online environment, there are no boundaries. There's nothing stopping you from a global, almost like a effect on these anonymous payments that can be coming from anywhere. The physical dimension of cash and other valuable things that we are able to handle, like diamonds and things like this, are today used for criminal purposes, of course, like money laundering and so forth. But because they are physical, they have this physical limitation. So you actually have to transport them. So if you have 5 million euros in cash, it's going to be a pretty big briefcase, no matter what is the denomination of the notes that you're using. Now imagine if you have that briefcase of 5 million euros in a digital format, where you just basically press a button and it's instantly in the other side of the world, and it's fully anonymous. That creates a very dangerous environment. So I think that's not something that we should be striving for in any shape or form, and that's why we have regulation around this. However, the privacy of transactions is a whole other topic. Having private transactions is everybody's right, at least in my opinion. The ability to basically transact between individuals without being worried that there is somebody's watching over your shoulder, or what actually is happening, is important. So with the emergence of properly constructed digital identities, we are actually able to achieve a very privacy protected system where the day-to-day transactions that we do can be fully private, and only if there is some kind of criminal activity associated with it, then you can find out who did what with whom, but only for those transactions that are under suspicion. So again, if you just really want to have private money movement, that can be achieved and should be a minimum requirement for any financial system, as far as I am concerned. But it's just, we have to also understand that there's a lot of bad things happening there. We need the mechanisms to protect the laws or the laws and regulations that are defining our current system.
Okay, so on the other hand, in your opinion, what are some of the most promising use cases for mobile money and digital financial services in emerging markets? And how do you think technologies can help to drive economic growth and development here?
Yeah, so the mobile money journey in emerging markets has been going on ever since M-Pesa launched in Kenya a long time ago. And we've seen the evolution of these services happening in a very, very tangible way. Something that started from a basic ability to deposit cash and then send that money to another person in a digital format over a mobile phone has now turned into services that allow people to actually do things like accumulate wealth, plan their own financial well-being, even do lending and payments in installments, basically, allowing them to access completely new ways to deal with money and accumulate wealth effectively in these markets. The move from what we call from financial inclusion into financial well-being is a very tangible thing that we're seeing, and it's not only about being able to transact; it's also about being able to actually grow together with the economy, not be excluded from the growth of the societies around these people, and being able to provide services that make that happen. The use cases, of course, are familiar to all of us who have ever bought anything lately. So things like buy now, pay later is a big thing right now. This allows people to break larger payments into installments over time quite easily, and having access to easy credit for times when you need more money than you have at hand at any given time, and having that available in an affordable way is of course an important enabler for small businesses and individual entrepreneurs, for example. The savings elements are of course also important. Sometimes you want to be able to put your money in a place where they actually accumulate interest and grow over time, and this allows even generational wealth to be accumulated over time. These are basically use cases that we are all accustomed when we are talking about banked economies. But again, having these services available for people who are underserved by banks has been a significant move forward. Yes.
So still, it's only about in a house.
So services like savings, investments, and loans are services that we who live in places where we all have bank accounts, all have access to the banking services, are quite well familiar to us. But in these economies where banks are not able to serve large parts of the population, it is the mobile money services that are now making all of these familiar use cases reality for these people as well.
Okay, so the last question for you is of a personal kind. It is, what would you be doing in your life if not this right now?
Probably I would be in somewhere warm, somewhere nice, like Barcelona, but maybe not doing a podcast interview, even though this is quite fun. So again, I would be enjoying life somewhere warm, probably enjoying good food, which is another big favorite thing in my life, of course.